Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this quiet Monday, July 3rd edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Skeleton crew in the Benzinga office today, but Pre-Market Prep never stops, so we are here with you for this half day of trading. Markets will close today at 1 if you didn't know that already. What are we looking at this morning? We're looking at auto sales today. We're looking at Tesla after Elon Musk's tweets from over the weekend. We're looking at bank rate getting taken off the board. We're looking at some headlines from Barron's as well. Two guests on the docket for today. Our first will be at 8:15. She is Raghee Horner, a Forex and currency trading expert for Simpler Forex. And then at 8:35, we're going to be joined by Anmol Singh. He's the founder and head trader of LiveTraders.com. Joel, how's it going this morning?
Oh, it's going excellent. Ready to go on this shortened trading day. You got the S&Ps in the green, cooperating with the 4th of July rally, up 7.5 at 28.5. But folks, we got to keep an eye on 24.29.75. That was the high from Friday. We traded a little bit above it, so that's certainly going to be the key to the upside. On the downside, I don't know. I don't even think we'll get back to that double close area. 24.20. That was your close on Thursday. Off the board, 24.21 on Friday to end the quarter. You have crude making a comeback here. Back over $46, up 16 cents at 46.20. Just quietly creeping up here from the $42 handle. Gold not having a good day, down $10, down $9.80 at 1232.40, kind of migrating back towards that $1,200 level, making a new low of the move. Silver down by 20 cents as well at 1641.5. Dennis, you will be working a full day today because it's a pre-American holiday, not a pre-Canadian holiday.
Actually, this is the Canadian holiday, so I'm not supposed to be working at all because July 1st, which is the 150th birthday of Canada, fell on a Saturday. Everybody gets Monday off except me. So I don't get a holiday at all. I have to work tomorrow too.
What do they call that? What do they call that holiday?
Canada Day? Yeah, he doesn't know.
No, I forgot to mention, actually, on the pre-market show, Happy Canada Day, Dennis.
150 years.
Congratulations.
There you go.
Yeah.
And what do you guys do? I mean, break out.
The cool thing for the 150th year anniversary, they actually are giving, you get free access to all the national parks this year. And up here in the boating area there, you get a free lock pass. So I get to go to the locks for free this year. That's fun. Free national parks and free locks.
What is a lock?
A lock?
It's what you eat. It's what you eat on a bagel.
When you have two bodies of water, one's higher than another, you need the lock to lift your boat up to the next body of water.
Oh, I didn't know that.
Yeah, there's actually the Trent Severn lock system, 45 locks that'll take you from basically 20 minutes from where my cottage is all the way to the ocean. So, and all through the little lakes, and the locks will get you there.
And Spencer was thinking about a bagel and locks.
No, I was not. I was thinking about a monster. But
Loch Ness monster.
Locks are
free Loch Ness monsters too. We got everything here in Canada. Everything's free this year. 150 years.
It's pretty cool. I went to the Sioux Locks once and actually went up and through that the powerlifting and stuff. It was pretty neat. But believe it or not, for a pre-holiday session, I mean, we got some action going on.
S&Ps are moving. And these days can work two ways. What you have is a lot less players in there. And what that can sometimes equal is less liquidity. So there's just, not as many players. So sometimes, there's not as many people, not as many orders on the books. And sometimes that can make movements in stocks actually a little bit more volatile. So it can work both ways. What we're seeing here in the S&P futures this morning is a quiet little rally, continuing from the end of the quarter, which, was pretty much going straight up at the end of the quarter there. So if you're fading that, which I was looking at possibly fading, I'm glad I didn't because the market's continuing to go higher here. S&P futures are tacking on more gains from the end of the quarter, Joel.
Yeah, it was a quiet day on Friday. I mean, you held the lows of the move. You had the big sell-off midweek, and we're just back into this. I mean, trading range. I mean, I know we're not going to have Nick on tomorrow, but he would tell you, you do get some wicks on these candles, but I mean, the majority of the trading action for the month of June, between 24.20 and 24.30, spend a little time in the 40s and the 50s, very little time in, under 24.20. And here we are again. So really nothing to knock the market off its perch or blast us off above 24.50.
Do have some individual stock news, and Tesla is catching a bid here this morning. It is off the highs, but actually significantly off the highs, but still catching a bid here this morning. It's up 7 points. Just looking here at Tesla action. Spencer, what are the details here? It sounds like they're making some cars.
Yeah, King Elon got on his microphone over the weekend. The Model 3 passed all regulatory requirements for production 2 weeks ahead of schedule. They are expecting to hand over the car to their first 30 customers on the 28th. August. They should have produced 100 cars in August, and by September that'll be above 1,500 cars. Looks like we'll have 20,000 Model 3 cars per month in December. So the Model 3 is finally happening.
Some people are going to get some cars, and Tesla shareholders are happy here this morning. Stocks trade up. I saw a 373 tick, Joel.
You did.
Yeah, and it's at 368, so it's 5 points off those highs. Technical thoughts here. This Tesla chart is interesting because it's starting to look a little bit broken. Bouncing back here this morning as they're going to be making some cars. I don't know. It still looks a little broken to me, though.
You had a pre-market high, or was that an after-hours high here? That pre-market.
No, that was pre-market.
Yep, 73.64. You've backed off 5 points, so that is not a good sign here. We'll do a couple different technical things to find out if this rally is for real. We broke down from 87 to 54. That's a 33-point rally. So let's call it 16 and a half. That takes you up into the 372 and a half area, right where the pre-market high is. So I'd be keeping an eye on that to see if we're going to go back to the highs. Coming back on the downside here, I don't think on this shortened holiday that we'll take out that low of the move at 354.10. But right now, only three levels I can give you. That low from last week at 54.10, the 50% retracement right there at 372, and then the all-time high, which I'm sure double top at 86.99 and 86.95.
I think I'm still a seller of the rallies here in Tesla now, and not long term. I don't know long term. I mean, I've been wrong on this thing long term forever. I've said I didn't like it because I'm more of a value player, but it just looks broken. Like not talking numbers, not talking anything else. We've been in such an uptrend here, and that uptrend looks a little bit like it's starting to fade. But every time the stock looks like it's starting to fade, more buyers just emerge here. So for me to get bullish this again, I want to see it get above 376. That's where I want to see it start to get up above. Otherwise, I'm staying bearish Tesla, which I've been bearish forever. So maybe I just want to do opposite of what I say on this. I've been wrong on this stock a lot. Jumping over to Rumor Mill. Here's an interesting one from the New York Post over the weekend. They are talking about Disney, and they're saying Verizon. Verizon could be a potential suitor for Disney. Now, this is New York Post. They break a lot of stuff, but I don't know if I see a mega merger here between Verizon and Disney.
That would take a lot of money, and
we
discussed it. We looked at the market cap of.
It'd probably be a $200 billion deal.
And that's
it'd be impressive.
That's as even if Disney wants to sell too. I mean, there's a lot of different factors here. Cannot be ignored. Disney really didn't move up a whole lot off it last week. Shout outs to Thankfulness. She was asking us last week about what she thought about Disney at the 104 level. And it gave a couple jabs. It did go down to 103.17, but firmly back up here over 106. For me, forget the merger stuff. 107.5 is my level on the upside. Those are your highs from Wednesday and Thursday. So for continued upside, I'm looking for Disney to clear 107.5.
Yeah, I think so too. Couple tops up there. I'm going to go with your number 107.5, and I think there's going to be not much material, not much follow through on a rumor here because this is just too big of a deal to just. I don't see this happening. So I think it's just talk.
A big
Jumping
level. Just let me give you a big level here.
Give it to me.
Ford in Verizon. Look at the lows from yesterday. 44.36. The low on Thursday. 44.39. Former low of the move, 44.46. So traded in the 44.80 handle or 44.85 right now, up 19 cents. Just keep an eye. Big level there for Verizon to hold.
We did have one merger here over the weekend though, and it's Bankrate. Spencer, give us the details.
Yep, Bankrate going off the board there. They were acquired by Red Ventures for $14 per share in cash. The deal's worth about $1.4 billion.
RATE, keeping it simple. 1.4 billion, $14 in share in cash. 13.75 bid right now. Best offers up at 13.90. So there you go. It's given a little 20-cent or 25-cent discount off. Stock's been running up ahead of this, so I don't know if somebody's had the memo or not, but impressive move here for Bankrate and impressive for the shareholders as it's getting taken over.
Not much to say really about that.
Joel's nothing to say about that. So he's just
it's all new, right?
Yeah, nothing to say about that.
It's done. Cash deal over. Let's move on. So, and jumping back over here, what did I want? I had one stock I wanted to go to. Yeah, I wanted to talk about Micron, and I had mentioned this on Friday. So, just how, and Friday's action, you got to almost take it with a grain of salt, any action from Friday, because it was the end of the quarter and see some funny things happen. But Micron had a great report. And we talked about this on the Friday, or like Friday on the pre-market show before it opened. And we were saying it's trading up in the pre-market. I was saying how I had shorted some stock because Micron kind of felt like it was one stock that they might actually sell on good earnings. We saw this on a couple other tech stocks. They were buying some weaker stocks. It's call it rotation from the leaders to the laggards. But Micron had a good report. I kind of had a feeling, an inclination that they might sell it on a good report, and they hit it hard. I mean, so this is interesting. So here's a good report. Stock opens up around 32, straight down below $30, closes below 30 at 29.86. People scratching their heads. But if you were listening to the pre-market show, you wouldn't be scratching your head because we were saying that sometimes, when stocks have had big run-ups, they get crowded ahead of the earnings, and everybody's getting on. And whenever the trades get crowded in one direction, usually there's a shakeout. And you can say, well, as a buyer, there's still so many shares outstanding. It's where all the short-term money is, though. Like short-term day traders may be sitting in there, short-term swing traders may be sitting in there. People speculating that Micron's going to blow it away and it's going to go higher. That sometimes changes, and it depends on the earnings environment. But lately we've been seeing this. So this is a warning, maybe even going into next earnings season, which is going to be a little ways away. But, if stocks are running up ahead of the earnings, sometimes they really got to blow it away for it to go higher. And if they beat, it's just sometimes not good enough.
A couple different things here to point out. First of all, the high of the move, we keep an eye on the highs and the lows, but really like that closing price, the high of the move, which was made on the 26th at 32.50, was protected, closed lower. The close on Thursday was 31.47. So if you got you got the higher open, but you only went another 3 cents before reversing course, and then you easily cut through the close. Got into the $29 handle, 29.71 was a low, 86 close. Big level there because you had another low at 29.82. That was back on June 16th. So, if you're looking for this thing to rebound and just go right back up because it was a good report, then we should not be trading below 29.71. You could also wait to see if it takes that level out, if it can get in a lower 29 handle at 29.21, but not going up off a good report. I don't know. I think I
still just look at all these tech stocks charts, and they were okay on Friday, maybe a little bit to do with end of the quarter, but I mean, I look at Nvidia, I look at Apple, and we talked about this on Friday. They all still look heavy to me. I know they're rallying here this morning, the market's up overall, but as long as I guess those bottoms hold, but Nvidia, for instance, that absolutely necessarily has to hold a 142.11, which was the low of the move back after the Citron tweet. So it takes that out, and you're going to see more money fly out of this thing. So that's, a level. Apple is the same thing. It absolutely needs to hold those couple lows that it made back to back at 142.20, 142.21. Tested it last week, 142.28. I mean, you don't get levels bigger than that. So as long as those hold, you can make a case that, okay, I'm going to come in here and try, and call the bottom here, and I think we're close to it. We're a couple bucks off it right now. But when those levels are breached, you got to go, in my opinion, as a trader. As an investor, it's a completely different story. But as a trader, when stocks start making new lows, I always say you got to go.
And just kind of with this Micron, we've talked about the whole rotation and stuff. And, here's a stock that's had a tremendous run. Maybe pull the money, put it into the biotechs, put it in other places. So another good example of rotation of money. Spencer, 8:15. We got a guest coming up here.
You have a guest coming up here. Raghee Horner, Forex and currency trading expert at Simpler Forex. We'll be right back with Raghee.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Connon, along with Dennis Dick and Spencer Israel, and we have Raghee Horner on the line. She's a Forex and currency trading expert for Simpler Forex. Raghee, how you doing today?
I'm doing well. I like being called a force. Can we go with that? I like it a lot.
You are an expert, or else you wouldn't be allowed on our show unless you're an expert. You should know that by now. First of all, any tricks of the trade for holiday trading? Dennis and I just talked about at the top of the show. Sometimes there's some pretty good, pretty good action because of, a little bit less liquidity. You'll be able to, get your orders, out there and get them, picked off, or, make a market a little bit more. Any tips for this holiday trading day?
It's interesting because coming from that Forex and futures background, there's no holiday for a Forex trader, not really, on the 4th of July. So I'm usually at my desk first thing, taking a look at what's going on towards the tail end of the European session. And I'll definitely be doing that tomorrow, looking to possibly get some fills on the euro and maybe even some yen pairs going into the holiday seasonal holiday in the U.S. So that's usually where my focus is at.
Yeah, I was talking with a buddy of mine. We were talking about, the SPOOs trading around the clock and Bitcoin. And then, we started talking about, currencies. And I'm just, and if I'd ever done a lot of the foreign currency trading, and I said, I just haven't. I mean, because you really talk about a global market. I mean, that's something that just never stops. So you gotta have great discipline to be trading those markets. Let's talk about the dollar. And the dollar lost 1% last week, closing its worst two-quarter stretch since 2011. And maybe investors are starting to grow more confident that economic recoveries elsewhere are gaining on the U.S. here. Talk to us about the sell-off from last week and what you're looking for to see if this is perhaps just a buying opportunity in the dollar as opposed to a new trend.
So when you look at the dollar, obviously we can look at the DX futures or traders can look at the UUP ETF. But the story for me isn't really as much about the dollar, because I think when people look at the story focusing on the dollar, they say, wait a minute, we've got a hawkish central bank. They've already raised rates twice. I know we might be looking at a pause, but what's up? Why can't the dollar, get its head above water? And that has to do with the fact that there's a lot of other central banks now. The ECB, the Bank of Canada most recently, even the RBA might start to shift that neutral to dovish tone they've had to more hawkishness. So we've just got some freshly hawkish stories out there in the ether, and traders are saying, wait a minute, if this is, here's a great trade for some of the listeners here. Take a look at the dollar circa 2014, like mid-2014, when all we could talk about was the taper and when the Fed was going to, roll out of the asset purchases. We're in that same conversation right now with the ECB, and the euro is sitting at those same foothills. Well, if the euro is going to head higher, it is impossible for the U.S. dollar to really gain any footing against currencies that aren't way weaker than it. In other words, euro and U.S. have an absolute inverse relationship. So partly the U.S. dollar weakness is absolutely coming from the euro strength we're seeing.
And you see this economic data coming out, and I like to look at the economic data, and then I like to look at stocks like utilities that are supposed to, be moving contra to interest rates. And really, if you look at, the economic, the unemployment rate is low, but if you look at like the GDP growth, you look at some of these other things, and you look the way they're buying utilities here. The Fed is maintaining their hawkish stance, but I don't know. Is it believable?
Oh, right. So at this point, I think everything that we would actually expect the Fed to do, we've just baked into the cake. We know they're going to have to slow down the rate hike pace, and we know other central banks are going to come on to start hiking rates. That in and of itself, a hawkish RBA, a hawkish BOC, hawkish ECB, it's going to put pressure on the dollar, because the number one way the world expresses an opinion about any currency is against the dollar. So if I get long euro, I've got to get short dollars. If I get long Canadian dollar, I've got to get short US dollars, and so on. So that's a lot of the pressure there. But I look at the energies. I'll tell you what, I've had a longer term play in XLE to the downside, XOP, OIH, and that's just pretty much been a much cleaner way to play the crude oil weakness. You look at USO or CL futures, that's been bearish, but it's been a bumpy ride. But you take a look at XOP or OIH, that's been a much easier short. So that's where I've kept my attention in terms of energies. Just stay short, wait for those bounces, and sell into them.
Raghee, I've got a question for you here just on that topic there. So I'm looking at the oil charts. I'm looking at that XLE, XOP chart. And then I'm looking at the Canadian dollar chart, and something disconnected here, because usually when oil is weak, and we've been fairly weak here in the entire 2017 on oil, usually the Canadian dollar starts weakening, but the Canadian dollar has actually been showing a lot of strength. Where's that strength coming from? Because usually it's an oil currency.
Hey, good catch. I'll tell you what, no one's talking about this enough. I'm so glad you brought it up. So every commodity currency, Aussie, Kiwi, Loonie, the Canadian dollar, right now is actually keying off a freshly hawkish Bank of Canada. They had their, I think, Deputy Governor Wilkins come out and completely change the tone from what was perceived to be a neutral central bank to now hawkish. So the minute the central bank starts dominating the narrative, that commodity currency personality just takes a distant back seat. So the Canadian dollar has been able to just buck that trend, because now they've got a hawkish central bank. And if you look at commitment to trader data for the last 2 weeks, it's been an epic short squeeze, because the Canadian dollar was a great, easy currency to sell against darn near anything. And now it's, still on the tail end of that epic short squeeze. And that's because of the central bank. Major shift.
Raghee, shifting away here from the dollar a little bit now, I bet you when you're out at a cocktail party and people find out that you're a foreign currency expert, and I'm sure they ask you how your Bitcoin trading is going. So have you been following that market at all, and do you have any Bitcoins?
Oh, gosh, yeah. So Bitcoin is one of those things where I think most currency traders out there, and I always love to mention, I think currency traders or currency trading is always thought to be limited to the foreign exchange. And in reality, got to give a lot of props to CME because they've now, I think, gotten north of 250 billion in turnover per day. Now, that's a far cry from what's happening in Forex, but that's a legitimate number. So I always try to encourage people, if foreign exchange isn't their thing, to take a look at the futures. But Bitcoin, wow, last October, Bitcoin was continuing to move, kind of this accumulation, narrow little range. And going into the elections, the peso started getting a little lumpy, and so did Bitcoin. And so I bought quite a few Bitcoins back in October, thinking it would be a political play on all the uncertainty the U.S. election was bringing. And I just kind of hung on to those. And that was pretty much it. Back in October 2016, I did not think we'd be looking at, the heights that we're sitting at. But I will say, bubble or no bubble, blockchain technology is here to stay. And I've been really recommending people take a look at, Ethereum. And I think like these ICOs have become even more popular than IPOs right now. It's definitely a very interesting time.
That's a great point there. All right, before we let you go, the market here, even though we've had some wild days on the upside and the downside, we're pretty much in a trading range here. Lower oil really hasn't knocked us off our perch. We got through another earnings seasons here. Is there anything, technically, looking at the S&Ps or the other markets, or, technically give us something to look forward to until we have you back on again, which will be soon, or fundamentally here, what's on your radar here for the next few months?
Well, I'll tell you, I've been continuing to focus mostly on the equity space, on the Nikkei and on the NAS. And those have been basically because mostly through May and June, they've been the two really resilient uptrends. So I continue to buy pullbacks in the Nikkei and NAS, and I'm long both. Now, I know the NAS had a bumpy ride last week, but if you step back and look at that daily time frame, as long as we can find some bidders at 5,600, I'm willing to buy an oversold NASDAQ. And then I think probably this week, after the holiday, I'm going to start looking at getting long the S&P. And I'm looking at that September contract and thinking that 2420 area, 2415 is looking pretty darn good. And so that's probably going to be the next addition to, not yet. I'm not long the S&P. The speed is quite yet, but I think my long Nikkei and long NAS are going to have some company there. And, the Dow was such a popular, uptrend for so long. I'd like to get back in on that one. I'm probably going to sit on the sidelines in the Dow for a little bit longer, but if I do get long, it'll be probably closer to that 22,000 level on the September Dow futures. So I like the trend. I know that it's kind of spinning. I think a lot of the U.S. government concern and the big question mark that hangs over it all is affecting not only equities, but affecting the dollar as well. You look at the CBO report on healthcare, sent the dollar lower. You had a nice IBB short on that. So I'm not underestimating how much the U.S. government's kind of weighing down dollar and equities.
Going with the trend, Raghee Horner, Forex and currency trading expert for Simpler Forex. Covering a lot of things here, Raghee. We really appreciate you coming on this shortened trading day, and we'll speak to you again soon.
Sounds great. Thank you, gentlemen.
Thanks, Raghee.
All right, S&P futures holding up here near the highs of the session, up 750 at 2428.50. Want our traders to keep an eye on the pre-market high of 30 and a quarter, because that's only 2 ticks above Friday's high at 29.75. So opening up into a little resistance there. Dennis, congratulations there. I usually get the good questions, but you came up with one today on the Canadian dollar.
I've been wondering myself, because obviously as a Canadian, and making mostly U.S. money, I'm obviously sometimes converting to Canadian dollars. I'm like, man, this is starting to really stink here as it's going down to the 129s here now. I was getting 135, 136 just a couple months ago, and then I look at oil, and I'm like, man, with oil going straight down, you'd think that Canadian dollar wouldn't be doing that. But good catch there, to say that the Central Bank of Canada getting hawkish there. Obviously, when interest rates start going up, that matters. I don't know how much Canada can raise raise them though. I mean, we've got such a housing bubble in Canada. Even if they get hawkish, I don't see rates going up in Canada very much in a hurry because, we've said in the States for a long time, I don't think rates are going to fly higher even though they're going up slightly. I don't know how they raise them in Canada at all. Everybody's sitting there owning 2-3 houses. Huge housing bubble in Canada, especially the big cities. Start raising rates, I think that bubble starts to burst.
All right, 8:29 here. We have a few minutes before we bring on our second guest, but we did talk about we talked about Tesla here, but we have auto sales coming out today for the big three, and Dennis, one of our longest standing bets here in Ford Motor. Ford, we should have sold.
Neither of us have won that bet yet, eh?
No.
11. What is it? You could make it up right now because I don't even remember. What's the bet? Don't make it up. You got to be honest because we'll go back and we'll look at the tapes. What is the bet?
You need 1066.
Ooh.
Because it was the former, that is the low of the move, and it will be the low of the move going into the next century. 1067, and it got a pop after Mark Fields resigned, and it got a nice pop that day. I think it might even be at the exact same area. So on the pop, you said it would make a new low of the move at 1066. And I took, I believe it was probably trading at 1116, and I took 1167. And so far, we did sneak into the 10
So
handle.
far, we've got the channel. Me and you called the top of the channel. I call the bottom of the channel.
Right. It's tested your end a little bit more. We did get a 1076 print, and the highest we've been is 1154, but maybe get some good auto sales numbers. Still sleepy chart, but looks like it's just trying to bust out.
It doesn't look bad on the chart here now. It's a long time, so a month and a half since we made that bet, and I'm looking at it here. I like your side a little bit better here just because we've had this rotation from, the leaders to the laggards or from the growth to the value. Ford and GM are value stocks. The only problem is they haven't really participated that much. I guess GM's participated a little bit more. It's bumping its head up against that resistance at $35. If it could get up over there, maybe it opens up a little bit. And Ford, the same thing, just been bumping its head up against 1120. Call it 1125. Start to get up above that. And maybe could try to break out a little bit. We'll see if the auto sales come out. Maybe it's going to be a catalyst to take us, maybe out of this range.
Yeah, they do. They do move pretty good off those numbers. GM on the upside, 35 has been the level. I haven't been over $35 since you had a 35.29 print back on April 28th. You're high on Friday, 35.05. But you know what? You're getting a little running start here. You're down 22 cents, but not too far away if there is any people at the $35 level.
Downward dog here has got a couple stocks for us.
Sure, let's do it.
Yeah, let's do it here. 2 stocks, and this one we've been talking about on the show. He wants to know if it's time to do some bottom fishing here in Snap, SNAP. I'll tell you, the 17 is held, and we know that was the level where the underwriters were defending it a bit. Man, it really held 17, 1703, 1713, 1721. I did buy it once down there, and then I got shaken out. I wish I would have held it because it's looking like it wants to go too. I mean, I think, it cuts through 17. I don't want any part of it, but you got defined risk here. If you're coming here and, fundamentally I don't like it at all. Long term, I don't like it at all, but technically it doesn't look bad. It's starting around here a little bit, 1780. I mean, cuts through 17, I'm getting out if I'm long it. As long as it stays above 17, maybe it is an idea to try to snap some up.
Yeah, there's a nice trade to range on Thursday and Friday. You were probably doing okay. Lows within a nickel of each other, 1762 and 1767. And the highs also within a nickel of each other, 1808 on Friday, 1813 on Thursday. So not quite an inside day, but I'm keeping an eye shorter term. Those two levels, 1760, 1810, could be your key to the next move here in Snap. 1777 was the close.
The other stock, which I don't mind this one either. He's got good eyes here this morning, that downward dog. CLDR, Cloudera. This is an interesting candle here. So stock's been going straight down, but you got an outside candle here now, and this totally sets up for the 2-day move. You know how I like my 2-day move, and good, for bringing this one to my attention here. Close at 1602. It's bid at 1603 here right now, but that outside candle, a little reversal day there on the day before. I like that candle. I think this thing can maybe try to make a run to 17.
Who mentioned this last week? I believe one of our guests did. I can't remember what. I'm not going to ask you what this does because you'll get mad. But
I have no idea what this does. Something
uh,
with the cloud era.
it could be up. Wow, up 8 cents here. I like where 1602 close, 1620 high. Could get into the upper 16s today. You get some momentum. 1642 is really only a minor resistance point. That was from Tuesday. But I had a 17. You got two highs here, 1669 and 1671. So see if Cladera can mount a rally. Spencer, we're going to go with another guest here at 8:35, right?
We are, and I was going to say, if you don't know what a company is, just assume it's a software company, which is what they are. Just
Cloud. I was right.
Just
Cloud.
assume.
You take it from the name.
Just assume software.
Cloud
or
ERA.
data. Okay.
They calculate baseball ERAs on the cloud.
Yeah, sure.
Oh,
yes.
let's not talk about the Tigers.
All right, 8:35.
There's no baseball talking in the D.
All right, let's go take a break. We'll be right back with Anmol Singh. Welcome back, everybody, to this July 3rd edition of Benzinga's Pre-Market Prep. I'm Spencer Israel. We're on the line now with Anmol Singh. He's the founder and head trader of LiveTraders.com. Anmol, how's it going today?
I'm doing good. Thanks for having me.
Thanks for coming on. So, half day today, what do you usually look at on a half day of trading?
Right. Usually when it's a half day of trading, I'm focusing on like the first 30 minutes because I think after that the volume will really die down. So you really got to focus on stuff that has either fresh news, some sort of pre-market volume, is gapping, just something that shows that there's interest in it. Because otherwise the other stocks might not have a lot of volume or a lot of liquidity today. So focus on like the gapping stocks first 10, 15 minutes, take your quick money, and then usually I call it a day on these type of days.
Okay, so anything particular you have your eye on this morning, and then we'll get a little bit longer term.
Yeah, I'm going to be watching Disney and Tesla today. I think those are ones that will at least have some volume or some sort of movement today. And then we're going to look to find entries in those patterns. Both of them for me have a long bias for today, but doesn't mean I'm going to be getting in right off the bat. I'm going to be waiting for some sort of technical pattern or setup. But I think that Tesla and Disney, they're going to have volume today for sure. So liquidity is not a concern.
Tell me about your process in the morning. What's that like? How early are you up, and kind of like, what's your morning trading ritual like?
Right. So, for me, it's not that early at all. I usually, I'm, coming to my trading desk around 8:30, and then I do like about a 30-minute scan where I'm trying to find stocks that are gapping up, gapping down, and have a process of selecting, which type of gaps I want to trade and which types of gaps are not good. And those are mainly based on, where is it gapping to? Is it gapping to support resistance? How big is this gap? What was the prior days look like? Is it extended when it's gapping? So I consider those factors in, and I grade my gaps in a point scale, and then I try and get like 20 stocks usually between around 9 o'clock, and then from 9 to 9:30, I'm taking a look at their 60-minute charts, weekly charts, really filtering them even further, and trying to get those 20 stocks down to a manageable list of maybe 10 stocks. And then when the market opens, I am usually trading a first couple of hours as a day trader. So I trade first 2 hours, not even first 2 hours, really like first hour. That's what I focus on as a day trader. And then rest of the day, I'm scanning for, swing trading stocks, or I'm looking at my forex trading the rest of the day.
So then, when you switch over to swing trading, what is your process for that? Mostly kind of the same thing as your day trading process, but just longer time frame, or are there different setups you're eyeing, or different things you use, different techniques?
Right. So day trading is a little bit different because I'm only mainly concerned with the prior day's action, and I'm concerned with just finding an entry for a quick little scalp. Whereas for a swing trade, what I'm really doing is I'm looking at weekly charts, I'm looking at daily charts, and I'm looking at different kind of patterns like waiting for the trend line to break, buying a pullback, and there's a setup we play which is known as the 3-bar play, which is the best setup for playing a stock that is gapped up. It's mainly, on day one, it puts in a wide range bar, let's say a wide range green bar. Second day is an inside day, which is inside the top third of the wide range green bar. And then the third day, you're trying to buy the break above those 2 bars. I mean, it's a simple setup, but it tends to work like 60% of the time. And, just keep pushing the button on that setup. Eventually, over time, you'll make a lot of money on that.
You talked about going after, the opening price or early trading. And Dennis has a lot of strategies that are based on the fair value of stocks in relation to the S&Ps. Are you looking at the pre-market or after hours action and then placing orders ahead of the bell? Or do you like to see that opening print and maybe get into the fray, within the first couple minutes of trading? Because a lot of times that first bar, that first 1 minute bar sometimes may be it for the whole day. So just talk to you about your order entry tactics off the opening bell.
Sure. So when the market opens, usually I wait for like a couple minutes. So I wait till about 9:32 before taking any trade. I like to give them a couple minutes to settle in, because especially also because of the spread, right? You buy it right at the opening bell. Sometimes the spreads are insane, and if you get stopped out, you might get slippage, which is like 50 cents more than what you thought. So I tend not to trade right at the opening bell. I tend to wait a couple minutes, and then look for a setup, maybe an inside bar setup, maybe like an opening range that it forms, or maybe it pulls back at the open, but then suddenly comes right back up to the high of the day, and then when it breaks the high of the day, that's my entry. So those are my typical setups. It's opening range breakouts. It's 3-bar plays, which is, again, let's say the first 1 minute bar is like a green bar, right? And then the second bar is like a tiny little red bar, which is inside the range of the green bar, but not taking out the more than 50% of the green bar. And then the third bar, we're just buying a breakup of the higher day. That setup works like a charm almost in all markets, both long and short.
And do you find yourself, trading, the same stocks for 1, 2, 3 days in a row, maybe if they get in a trend, or are you kind of always like shifting around to find out, where the movement's going to be that day?
Yeah, I think every day I'm trading different stocks. I'm trading every day the stuff that is gapping up or down. So every day is a different day. For me, stocks are more like tickers. A lot of times I don't know what they do, don't know what their company, none of that. I focus strictly on, the volume, what type of pattern it has. Does it have liquidity? As long as it has those things, I'm okay with getting in. And every day is a little bit different as far as what I'm trading.
Anmol, what is, in your opinion, the biggest, the thing that you struggle with the most as a trader, as a day trader? What's the hardest part for you personally?
Right. So, the hardest part what was for me, and also what is for a lot of other traders, is their own psychology and their own ability to follow the trading plan. I mean, I've coached tons of traders. I even fund traders with my own capital, and I have a lot of traders trading my capital at the moment. And the biggest issue that we've found with traders is the inability to stick to a set plan. If I've given them, hey, if you trade this setup, you only look for 2 to 1. You don't look for more than that. Hey, if you trade that setup, trade it pivot by pivot. Trail it until you get taken out. And a lot of traders, they miss it up. They tend to let their psychology influence when to exit or enter. If I've told them, hey, take it at 2 to 1, they might get out at 1 to 1 because they're like, oh, I thought it's going to come back. Or they're raising their stops too quickly, too tightly, that they end up becoming a break-even trader, right? They get up, let's say they're up $1,000. They raise their stop loss to break even. It comes down, they get out break even, and then the stock goes back up. So, a lot of people are too tight with their stops. They don't let them go, and that's one of the biggest issues because, if you want to last long term in trading, I mean, you need a positive expectancy. You need a winners to be bigger than losers. My batting average personally is like 55%, but my Sharpe ratio is about 1.7, the win-loss ratio. It's a positive expectancy model. And that's what people, have the inability to somehow follow a plan that has been given to them.
And well, Dennis Dick here. I just want to ask you, and I want you to elaborate on your stops, because this is something that I think a lot of people struggle with, and I struggle with as well. I'm a little bit different trader. I'm actually trading those opens, and I'm doing a little bit of different market making type strategies. But as a technical trader, it's difficult in this environment, especially intraday, because you get so much intraday chop. To strategically place those stops so you don't get stopped out on everything. First of all, what's your time horizon typically on one of your trades, and how do you know about where to place these stops?
Right. So what I've been doing in the recent market environment is just looking for 2-to-1. I get in, and let's say if my stop loss is 30 cents, my target is automatically 60 cents. It's like there's no discussion. It's arbitrary, 2-to-1, and I'm just playing the odds. So when I get in, usually if I'm playing an opening range breakout in the morning, so let's say you've got a 5-6 bars, it's been 935, and now you're buying the opening range above that. Usually at that point, my stop loss will be like a penny under the low of the day. So the stock has to go full red for the day to stop me out. And that's fine, and I'm perfectly fine with stopping out on those type of trades. But I give it the low of the day, so I give it the chance to wiggle around between high day and low of the day, and give it the chance of actually working out. As far as getting out of my trades, last 3 months I've been strictly doing 2-to-1. So stop loss is 30 cents, target 60 cents. Stop loss is 15 cents, targets 30 cents. It's all arbitrary, just based on the odds, because if you're doing 2-to-1, as long as you win 40% of your trades, you can end up becoming a profitable trader. So, sort of those are the odds that I'm playing. And, if you have win rate, my win rate, as I said, was 55%. So, you only need 40% to make money on a 2-to-1 style.
So this strategy is fairly consistent for you as well. Like when you play it this way, are you like, is this something or that will do better in a certain market environment than it will in another market environment? Talk about the market environment there and how maybe you adjust that 2-to-1, or do you ever adjust that 2-to-1?
Right. So this type of trading works well in trending environments. So
Okay.
as long as you're trending up, you're trending down, it'll work. And in a sideways market, it'll still work, but it won't be as consistent. So maybe your
Right.
batting average drops down from 60% to 50%. So that's what tends to happen. It'll end up producing positive returns, but some months will be better than others. So I have adjusted in the past, like in the beginning of the year, January of this year, 2-to-1 wasn't having a good time. And then I switched back. So what I started doing was I put 2-to-1 targets. But what I started doing was I was not doing all or nothing. What I was doing was I started raising my stops. So that's what I was doing in a tighter environment when things aren't moving. But environment like what we've seen in May and June, I just get in, I put my entry, I put my stop, and I literally walk away. I'll take 3 trades like that, put my bracket orders, and I'll just sit back and I'll just watch them either hit target or either stop loss. Usually I'm taking 3 to 4 trades a day. Out of 3 to 4 trades a day, 2 of them work, 2 of them maybe don't work. But the winners are 2-to-1, losers are 1-to-1, so you end up becoming a profitable day.
Yeah, it's just math at that point in time. So what stocks do you feel like are the best for this strategy? Is there certain stocks you pick on all the time that you like the best for the 2-to-1, strategies? Or, do you pick the Momos? Or are you picking the conservative stocks? What stocks do you like trading the best?
All right, so I prefer stocks between 20 and 80. That's my comfort zone, between $20 and $80 a share. That's usually my comfort zone. The strategy it works well on smaller stocks too, but it's not that reliable on stocks under $10 because stocks under $10 tend to get influenced a lot by news, a lot by liquidity, and just by me and my traders getting in and out. There's just not enough liquidity. So we focus on stuff that has liquidity, does over 1 million shares a day minimum, and and the chart, just the candles, they should look clean, right? They should not have intraday gaps. They should not have those little moments without any volume, moments without liquidity. Because when we're getting in and out, we're most likely using stop market orders. So we want to have a stock that has the ability to fill us, without any slippage or with minimal slippage. So, we focus on liquid stocks between 20 and 80, but we will trade like stuff like Tesla, Netflix all day, which is over $100 as well. And we tend not to try and trade stocks which are like $1, $2. But sometimes we have traded those in the past too.
Anmol, before I let you go, could you tell us a little bit about livetraders.com and what exactly you guys do?
Sure. So, livetraders.com was founded by me and my partner, Jared Wesley, and he actually taught me how to trade, believe it or not. So, we started this firm. Now, what we do is we provide training, courses, programs for those looking to trade. We also have a live trading room, which I'm actually going to jump on after this interview. Is a live trading room is basically I'm sharing my screen, I'm sharing my audio, and we're just trading in real life market environments. So even if I'm losing, people can get to see me lose. If I'm winning, they can get to see me win. So it's like a real life market environment trading. So we do that every day, and we have newsletters and things of that nature, as well as funds. So we back traders too. So traders that have potential or have reports or trading history or just show commitment and the willingness to learn, we can back you, with our capital as well. That's also something we do, obviously in exchange for a percentage of profits. So people can find out more about us by going to livetraders.com, and there's a free ebook there that people can download as well.
All right, he is Anmol Singh. He's the co-founder of livetraders.com and a heck of a trader. Anmol, thanks so much for hopping on today. We'll definitely be in touch.
Thanks, guys. It was great being here.
All right, 8:50 now. Got about 10 minutes left in our show this morning. I want to hop over to Barron's. Over the weekend, we'd like to recap Barron's when we have the time on Mondays. They did have a piece. I saw on Bristol Myers, they say that they could return anywhere from 25 to 40% in the next 2 to 3 years, mostly related to their drug Opdivo, and the pipeline for other cancer diseases as well. Joel, do you have thoughts here on this Bristol Myers chart?
Getting a nice pop here. Pre-market trading got up to 56.79, holding 20 cents off that level. Nice pullback off the highs. As long as we stay above 56 here, I like it to the upside. I think I'd rather try and buy it in the lower 56s here instead of up at 56.5. Old resistance from the last 2 days could be a new support. Just 40% upside. I mean, that's a big call for a drug stock. If you go a little bit longer to the monthly chart here, this thing has struggled hasn't really been over 60 and spent very little time there in January. I know they've had some competing drugs with Merck and whatnot, but a breakout over 60, and I think it will have a lot of strength. For today, I'd like to try and buy it in a lower 56 handle.
I mean, it's the Barron's bounce here, and Bristol Myers has given you a lot of chances. Is this going to give you another chance? Probably. It keeps giving you more chances here. I kind of like it long term here, though, so I would go more with Barron's long term. I don't know if you can see 40% in a year or not, but 2.76% yield. It's got more value than it did up when it was $75. I mean, big pharma, aging population. I think you throw Bristol Myers in your long-term investment portfolio and don't look at it for the next 10 years. I think you'll be really happy you did it. I think I'm going to do it at some point in time. It's not in my portfolio yet, but it's on my radar. As a trade, I'm not chasing it up $1 here this morning because I've seen Bristol Myers pop $1 a lot of times and give it back.
Right. Then let's just check the volume on it. There's a few shares traded, but I don't know, not enough to support that high of opening. And Dennis, didn't you you took a stab at this once, didn't you?
On the way down. I stabbed it at 62 and I sold it that day. Right around, I actually looked at my sheets. I sold like 62.10. I got out with a 10 cent in my investment portfolio. I day traded my investment portfolio because I decided after analyzing it and I was trying to catch a falling knife, I didn't want to own it at 62. I'm glad I did, obviously, continue to go down after that. So sometimes, when you do your analysis too quick, then I reanalyzed and I was like, you know what, looking at the balance sheet, I do all that. I'll be old traditional. I'll sit there and look at the balance sheets when I'm sticking some of my investment portfolio. I'll look at the cash flow. I'll look at, I'll take my CFA and do my whole fundamental analysis there. And that's how I come up, with my ideas a lot of times for my investment portfolio. Much different than my trading. A typical trade, my analysis is less than 5 seconds, for a lot of my trades.
Yep.
It's instinct. But on an investment, my analysis can sometimes be hours. I'll sit there and just crunch numbers and say, do I really want this in my investment portfolio or not? So I go right back to the fundamental analysis. Nobody does that anymore. I think it works still. So and then I use the technicals for my timing. So once I've decided I like a company, then I try to use the technicals for my timing. I don't think you're bad timing here in Bristol Myers. I think it would work here. I haven't struck yet, obviously, but I'm interested here in Bristol Myers too.
Joel, you said instincts. I thought you said it stinks. Referring
Stinks.
to Genesis 5-second analysis. Another
my
one.
5-second analysis stinks.
Yeah.
It's paid my bills, so I guess it works. But
That's
I don't
true.
know. Honestly, it's probably less than 5 seconds. I would think my analysis is typically probably 1 second. From if I analyze from when I'm looking, and getting a stock in my filters to when I'm buying, it's probably 3 to 4 seconds. So I'm analyzing in about a second. And then I'm getting my orders out there in probably less than 2 seconds to be able to go from seeing it to buying or selling it within 3 seconds. A lot of my trades are literally analyzed for probably less than a second, as quickly as you can think. But I made millions of physical trades. I'm making 50 to 100 trades a day. So you do that many trades for 18 years, you're going on instincts, Joel. You're exactly right. It's all instinct. I don't think, I just do. That's my trading, completely different than my investing.
Another one from Barron's here is Texas Instruments. They note that they've climbed 25% in the past 12 months. They could jump another 20% plus, driven by their strong margins, high cash flow, and dominant market positions. TXN.
Well, they're getting this thing on a pullback here, and a pullback at that. We hit a new all-time high at 84.66, and just traded down to $76 area. So, man, I don't know. Not a great looking chart. You're going to have some overhead supply. Not much prints in the pre-market here. I still be keeping an eye on the high 78. You have a couple highs of 78.21, 78.27. So I'll still be looking at that as resistance. The daily chart not looking that great in old-time Texas Instruments.
Well, not much news during our show. The only headline that I'm seeing out of Benzinga Pro right now is that Jana Partners has taken a 5% stake in EQT, and this is a report from Dow Jones, and they're seeking to scuttle the $6.7 billion EQT Rice Energy deal. So
this has had headlines all over at this stock. It seems like every week we got a major headline EQT. So, yeah, we're getting a pop here now, 60.75. I mean, they're going to try to block that deal. Maybe the market thinks that's good here, popping 3.69%. But it's kind of been a wild child here in the last month. For a stock that typically, is a little bit, less volatile here, this stock has been wild in the last month.
And another stock I just want to take a quick look at, and I couldn't believe the price on it when I looked at it. Cara Therapeutics. And man, I remember this thing running and got all the way. I don't know how many up days in a row. You had 28.50. You hit that on Tuesday, and then on Friday, they get some drug news, which is not too good. Almost a 2-for-1 stock split here, following concerning oral CR 845 data. Janney Capital cut their rating on this one. I don't know. Is this just a golden opportunity here after the thing ran to 28 and change? For me to keep an eye on that. The low of the move, 15.25, 15.39 low. Love to see it come back down there at maybe 15.50, 15.60 area. But man, look at all those days when it's just going up, up, and up. You're thinking I'm never gonna sell, and then
Boom,
one bad headline.
I don't follow the company enough, but when you have one headline on one drug doing this much damage to it, it's a little bit sketch. So I don't know. That's why I got to do more research on that to say whether I'd be a buyer down here or not. I always like buying stocks from where they came from. I mean, 14, you had a hard bottom there back in May. You actually bottomed there back in February. You tried in March again. It looks like a pretty solid technical level. If you were to get down to the 14 level, I don't know if it's got the gas to get there or not. It's kind of calmed down from the big sell-off there on Friday. It's kind of finding its range a little bit higher than that. Maybe that's a level you could strike at, but I think I need to do more homework if I'm going to look at this one.
All right, and anything in imbalances here?
Yeah, you know what? Big time.
Buy.
No, really mixed. So I'm looking, these are funny imbalancers here. Nike, 352,000 to sell. That stock's trading down 36 cents. I had the huge move there, we know, on Friday. So maybe this is just profit taking by some institution. But there's some other big ones here too. Look at Verizon, 215,000 to sell on Verizon. It actually just went red. Exxon Mobil, 182,000 to sell. Chevron, 145,000 to sell. Pfizer, 454,000 to sell. That stock just went red here too because these imbalances just came out. These are enormous, for a nothing day. Yum Brands, YUM, 80,000 to sell. IBM, 94,000 to sell. It's in the red now too. We're up over a point on the S&P. Yet you've got some major sell imbalances on some stocks. It looks like the value stocks is what I'm looking at here. Just when I'm trying to group them. GIS, 92,000 to sell. TWX, 47,000 to sell. Clorox, 50,000 to sell. CLX, $131 stock. That sometimes opens with a print of less than 10,000. Got 50,000 to sell here on the open. That's significant as well. Buy imbalances, there's a few here. Financials are looking stronger. Bank of America, 169,000 to buy. JP Morgan, 65,000 to buy. Glad you asked me this, because I hadn't really noticed this major action here for the imbalances. This is one of the. If these are real, these are going to be market moving. You're going to see some major moves here. Merck, 230,000 to sell. Merck. That's one of the biggest sell imbalances I've seen. Sometimes you see them on option expiration and get that big, but they'll have the other volume. But on a light holiday trade to have these, I don't know if the liquidity is going to be there to offset them very well.
Yeah, well, put some orders in and should have some fireworks off the open. S&P's continue to climb. It's one of these relentless rallies here, up 1075 at 3175. Not a lot in here. Thursday's close up at 38.75, but see if there's enough buy-in. Even if we get this up open here to to hold these gains. Spencer, minute over here on what's supposed to be a slow day. You want to wrap things up and preview Wednesday's show?
Yeah, tomorrow we won't be here. You can be here, but we'll be home celebrating the holidays. So. Take the day off, everyone. Have a good. Hope you have a good July 4th. As far as Wednesday's show, I'm going to be joined by Michael Pachter. He is, of course, he's the go-to gaming analyst on the tech and video game analyst for at least for the sell side. So any sort of entertainment video game tech stock, he is all over that. You can check out his show on YouTube, also the Pachter Factor, where he covers that entire space there. So Michael Pachter will be on our show on Wednesday at 8:35. As for today's show, if you missed a part of it or just want to catch it again, you can do so on Benzinga TV, which is our YouTube channel. Also, you can catch the podcast on iTunes, SoundCloud, and Stitcher. Don't forget to like us on Facebook, follow us on Twitter, and subscribe to Benzinga Pro. You can get a free 2-week trial if you go to pro.benzinga.com. Trade faster, trade smarter with Benzinga Pro. Okay, that is it. Have a good rest of your day, everyone. Good luck out there. And once again, hope you all have a very nice Independence Day holiday. We'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.